year. Our annual new order booking is what we track and monitor on a annualized basis or an annual basis. We are 3 quarters in. The last quarter is still to go. The orders that we book are typically, let's say, from automotive OEMs. When a new generation of vehicle platform or vehicle model is decided, they decide which all vehicle models MapMy will go pre-installed in, and based on the quantity and the rate contract, the size of contract and order is determined. Similarly, for APIs, when customers use our APIs and they decide on a minimum guarantee, or for annuity-based business where people are using us for a particular use case, and then depending on the milestones, yearly payouts or revenues are decided, and for that a total order is booked. So orders for these large B2B and B2B2C contracts, we track it on an annual basis. I can just tell you that based on the first 9 months performance of our annual new order booking, it is looking quite healthy. We are happy with it. We have 1 more quarter to go to complete the full year. And both, if you look at the orders that we have already booked or the pipeline that we have put together, we are quite excited about where that stands. That's one part. And then the second question that you asked is what's the split of revenue between our A&M, automotive and mobility tech, and consumer tech and enterprise digital transformation revenue. It is skewed more towards automotive and mobility tech in Q3. Could have definitely been even higher, but for the semiconductor shortage leading to automotive sales getting impacted. Consumer tech and enterprise digital transformation, as I explained, from B2B and B2B2C contracts, they were relatively muted because they, the impact of that would have shown up either in Q2 or will show up in Q4. So it was skewed more towards A&M this last quarter.
Right. And secondly, just wanted to understand how should we look at margins for this quarter as well as going forward? What do you think can be a sustainable range for our margins? And also, if you can kind of break down the ESOP charges during the quarter.
This is Rakesh Verma. See, if you can see our margins, we are very consistent all through. Whatever 3 years we had declared in DRHP or now, if you see the PAT margin, standalone in Q3, we have 36%. 9 months, fiscal year 22 is 37%. 21 it was 31%. So basically the margin, if you are asking, the margin is in the range of that 35-40% kind of a thing as far as the PAT margin is concerned. And what was your other question related to ESOP?
Yeah, so if we can break down the ESOP charges during the quarter within our employee cost.
There has not been any ESOP charges during the quarter, or it's very small, but I'm asking my CFO just to give the number. You can ask the next question, I'll let you know. Or 92 lakhs.
Okay, sure.
Less than a crore.
So what I wanted to ask here is that for this quarter particularly, we have seen almost a kind of 10 percentage point drop in the margins on the EBITDA level on a sequential basis. So any other increase in the cost that we should look at apart from the decline in the revenue? Any increase in the cost that can also have going forward?
What you're seeing, 39% EBITDA margin in Q3 standalone, of course it's related to the lesser revenue from operations. Okay? in this quarter. But in spite of that, the margin is still maintained at 39%, which we consider healthy, and 9 months year to date is 44%. So the 44% number is more sustainable type of a number on a year-to-year basis, on a yearly basis.
Sure. Thank you, sir. I'll get back into queue.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Kawaljeet Saluja from Kotak. Please go ahead.
Yeah, hi. Thank you. And congratulations, Rakeshji and Rohan, for a successful IPO. I have a couple of questions. First is, I'm still trying to wrap my head around your quarterly performance. Now, your press release says that Q3 revenues were impacted by sale of automotive, whereas the revenue was skewed more towards automotive segment. So that implies a steep decline in enterprise revenues, and one would have logically expected that to be a bigger growth driver. So can you elaborate on the reasons for same and communicate your outlook on it as well?
Yeah.
That's the first question.
That's the first question. Hi, Kawaljeet. Definitely A&M revenue could have been higher if the automotive sales had not stagnated or been impacted due to semiconductor shortage. There were 2 things I tried to explain on how to understand quarterly movement of the company. One is, of course, on this automotive side. In general, with B2B and B2B2C contracts, I'm saying generally, but it also applies to our consumer tech and enterprise digital transformation part of our business. There are some contracts which are skewed where we are able to recognize revenue based on milestones in particular time frames. Now, it just so happens based on our order book and order bookings of the past, those revenue recognitions will show up more in Q2, showed up in Q2 or will show up in Q4. So sometimes these quarter numbers move around, and that is what determines lumpiness in our revenue if you look at just standalone quarterly performance. But if you look at overall for a year, you'll see more steadiness or more steadiness compared
more
to
steady direction.
Yeah, more steady directions. So
okay, Rohan, I think in the DRHP and RHP as well, there was a certain order book mentioned, and there are certain broad direction and rule of thumbs under which your revenue or order book or other order wins translate into revenue. Does that still hold? Because looking at your quarterly performance, there seems to be some delinkage in a way.
No, it definitely still holds because all our order bookings, all our contracts are intact. In fact, I'm not supposed to give forward guidance, specific forward guidance, so I'm not going to do that. But just to give a sense that the number of API transactions happening on our platform, which is determined by consumer tech companies, that is growing. The use cases which for enterprises, for which enterprises are using us, that is growing. It's just a question of revenue recognition, and so which quarter it will show up in. So I would say it's a good thing to wait for Q4 results and as well as going forward to get a better sense of where the direction is. But from our perspective, we are actually quite confident, quite excited for Q4 as well.
Okay. Just a final question, Rohan. Are you going to be disclosing your segmental breakup of revenues, which is A&M and consumer tech segment or the enterprise segment going forward? And would you be disclosing your order wins every quarter, or would that be an annual affair?
See, as of definitely next quarter, we'll also be sharing our annual results. So you'll see the revenue split by A&M versus C&E. You'll also see our annual new order booking. So next quarter for sure you all will get those numbers. We would like to, as of now, as we speak, maintain that hygiene of annual new order bookings as an annual metric reported, and revenue split by market as a 6-monthly metric. Of course, the other financials you are seeing quarterly. That's what our preference is at this stage, to reflect more of our longer term business. But that's the inputs I can give you right now at this stage.
Okay, thank you.
Thank you. The next question is from the line of Vinayak Mohta from Stallion Asset. Please go ahead.
Hello. Yeah, good evening and congratulations on a successful IPO. So I broadly had a question with regards to the order book. Over what kind of time period does the order book, materialize? For example, you had mentioned that your order book is somewhere around 250. The new order bookings for H1 FY20 was 22 was around 260 crores, and 2021 was 470 crores. So just wanted a broad sense about how this order book materializes over a period. A general average answer would also work, so that it helps us, in figuring out what is the general trend for the same. So this is my first question.
This is Rohan Verma here. Thanks for the question. You can think of the contracts that we sign can be anywhere from 1 to 5 years, depending on whether it's C&E or A&M, whether it's an automotive OEM or a longer term enterprise, or something that can be immediately delivered and built. But if you had to go for an average based on kind of what our historical order booking has looked like, you can think of an average of 3 to 4 years, meaning 3.5 odd years. I'm just giving you some rough guidance for order to revenue recognition.
So just following up on this, so if you say that an order would be realized over a period of 3 years, so just extrapolating those numbers, you should from what you've done in 2019-20, and averagely your revenues for the current H2 should be ideally relatively pretty much higher than what it was in H1. Is that a fair assumption to make, given the order book that you have had in the past, and given that you mentioned that it should materialize in the next 3 years, 3.5 years? So going forward, the growth in revenue should be much better given the growth in order book as well, in H2 and then eventually FY23.
Yeah, see, in absence of semiconductor shortage, that was not something one could have predicted. That's something that even we would have comfortably said. Yes, H2 typically for the company is better than H1 historically, if we are talking about, and based on the order booking, that's exactly what gives us the excitement about the future. But yeah, I'd moderate my statement because of semiconductors. I mean, that's what happened in Q3.
Thank you. Mr. Mohta, may we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Madhu Babu from Canara HSBC. Please go ahead.
Yeah, hi sir. So what should be the directional revenue growth we should see in the automotive and the consumer internet segment on a yearly basis, leaving the quarterly aberrations over the next 2-3 years?
I think a 9-month growth on
37%.
On revenue, EBITDA was 87%, PAT was 60%. So
and revenue was 37%.
Revenue was 37%. We'd like to shy away from some specific,
but definitely we are working towards a better number.
Yeah.
I mean, it's really difficult for us to predict exact numbers.
Yeah, for us, predictions are also it's sometimes a bit easier because of order booking in the past, which we know will translate into revenue in the future. it could be the timing here and there quarterly. So I think that order booking should give you a sense of kind of where we will go in the future.
Sir, and secondly, can you explain the use case later for the Bajaj Finance which we won this quarter? So how will be the revenue and subscription or, transaction based? Any just simple view on that? Thanks.
Okay, sure. I mean, Bajaj Finance, if you open the Bajaj Finance app, it's a super app in the sense that there's so many different functionalities that they're offering. And so if you, for example, one of the use cases is if you wanted to see a nearby merchant where Bajaj Finance is accepted, for their various fintech offerings, that is powered by Mapmy Maps and our APIs. And so every time Bajaj Finance app is open, people are geolocated or they are searching for the places nearby where Bajaj is accepted. They are putting in their addresses so that, those locations can be determined. Those are all cases where Mapmy is getting used on the front-facing, consumer-facing side. On the enterprise side, I think Bajaj is a pretty sophisticated enterprise in terms of being able to use data science and data analytics, as well as very efficiently kind of monitoring and tracking their kind of field workforce. And so there's a lot of different location intelligence solutions of ours that they're using to analyze, to do location KYC, to do risk assessment, to run all sorts of hyper-local analytics on potential applicants for loans, etc., and to give credit go no-go decisions, as well as also to monitor and optimize the their field workforce movement and operations. We, with our APIs, it's a per transaction model that we have typically with customers. So in this sense, the more these apps get used, the more revenues accrue to us. I won't obviously talk about specific financials of any specific customer, but hopefully this gives you some color as to their or similar type of customers.
Okay, sir. Thanks for all that.
Thank you. Ladies and gentlemen, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Vivek Ganguly from Nine Rivers Capital. Please go ahead.
Hi, thank you for the opportunity. I have 2 quick questions. One, the difference between the total income and revenue from operation is the financial income. Is my assumption right?
Yes. Okay. The difference is the financial income, investment of on the treasury,
right,
or anything else like that.
Right. Okay. Can you speak a little bit about the competitive landscape? One. Secondly, with the new government regulation that you alluded to, so would a company like Google still be able to, collect the, the geospatial data, update it, and also commercialize it, or will they have to now, buy it from a local player or something? What would it pan out like?
Thanks for the question. This is Rohan here. Yeah, exactly. I mean, if you look at so I'll answer this in 2 parts, or let me answer the policy question first. Yes, if you look at the geospatial guidelines released by the Government of India, it does restrict foreign entities from doing vehicle-based ground surveys. They're not allowed to do terrestrial mobile mapping surveys. They're also not allowed to do street view survey, which is that 360-degree street view that you see in the US. They're not allowed to do that either in India. And then when it comes to data that is granular, finer than 1 meter in horizontal or 3 meter in vertical, actually foreign entities are not just not allowed to acquire, like they can't acquire any other data also from the field, but they're also not allowed to either resell. So they cannot become a supplier of that to any other company or organization. They're not allowed to reuse it, and that data is not allowed to pass through their servers. In that sense, companies which are doing that or continue to do that or may consider doing that will be in violation of the government's guidelines. on this sector. So this does have a pretty big impact on the industry, whether for B2B or B2B2C or even B2C in future, because essentially the guideline is saying that foreign entities can use this data through APIs for serving their users in India. They cannot resell it or reuse it. So basically foreign end user entities like automotive companies or tech companies or enterprises are being asked that definitely leverage the power of mapping and geospatial, but work with Indian entities in this. Now, what is important is for Indian entities to have the ability to service these use cases at scale and in a quality manner. So map data product companies, map data platform companies will be the people who can enjoy that benefit. And yeah, we are well positioned as the leading and probably the only company in this space. So this is.
So Rohan, quickly to follow on that. So is Google, if Google, Google is a global entity, but they also have a company in India, and they might have a couple of companies in India. So would it be considered as a Indian-based entity?
No. The definition in the guideline is an Indian entity is only that is owned or controlled. So if it is if it's a subsidiary of a foreign company, then and it's controlled by the foreign company, it is a foreign entity. So.
Thank you, Mr. Ganguly. May we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Manik Taneja from JM Financial. Please go ahead.
Hi, thank you for the opportunity. Just wanted to understand the sense of the impact of this milestone-based billing that we typically see on the enterprise, the consumer tech side, given the fact that this business is both a mix of fixed orders as well as volume-based pricing. So it will be very important to understand what's driven that. The second question is with regards to order booking. Rohan, while you mentioned that the order booking trends are quite decent and there is certain lumpiness to it, but would order booking during 9 months of this year be higher than what we witnessed in 9 months of last year? Thank you.
I missed the first question. Could you repeat the first question?
He's asking if the 9 months of order this year, is it higher than the...
We honestly, we want to wait to, we want to set a annual new order booking cadence with reported metrics, because it's something that we want to continue consistently in the future. Order booking is also going to be lumpy if you understand, because an automotive OEM doesn't decide every quarter that they have to go with new models. So there will be some quarters which are higher, some quarters which are lower. So in that sense, we want to also kind of set that expectation that giving annual new order bookings on a yearly basis and understanding that on a yearly basis is the right way to judge the performance and see the future potential for the company. But definitely I can share with you that based on our visibility of the order pipeline and the bookings that we have done, 6-month numbers, you all know because we put it in the RHP, we are quite confident and happy about how things might pan out by end of March. So just have some patience on that so that we have the full year to be able to report that number.
Sure. The second question, or actually my first question, was around the enterprise and the consumer tech business, which is where you suggested that there were certain milestone-based billings in the prior period, and that's why this quarter's growth was impacted. If you could give us some sense of the impact here, because this is a business which has both fixed order billing or fixed billing business as well as volume-based billing, and I would reckon that the volume-based billing would have actually been seasonally strong in the current quarter.
Yeah. So you're absolutely right on the CNE side. Basically, it's a combination of transaction-based revenue or subscription-based revenue and annuities, which are fixed kind of project-based or on a yearly basis, etc. So how to answer that?
I'll help you.
Yeah, go on.
In the CNG side, some of these fixed price contracts, particularly, the contracts happen to end in Q4 every year by year on year. It is just the nature of the beast. Just like many orders also come very nicely in Q4. I think maybe it is the way in India in the B2B and B2C kind of business is quite rampant, or rather say quite prevalent.
Thank you. Mr. Taneja, may we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, pardon my ignorance, but how much do we have any business with any government body, and how much that contributes if we have, and how that is playing out?
We have reasonably good business with the government. How it is playing out means you want to understand, typically we try to limit our direct business with the government into 20%. Indirectly, if we are an OEM, then we don't put any limit. We have done some very interesting and very good business with the government, including GST, and you might have seen some of those names in the RHP, or with CBDT, the Central Board of Direct Taxes, or with different other ministries also. So I don't know what is your other concern or related to the government.
And my understanding that as per DHRP, it was forming around 40% of the FY21 revenue. Is that a correct understanding?
No. Government has been historically less than 10% of our revenue.
What I was said was direct business with the government, we try to limit it in 10 to not more than 10%. But indirectly also our business happens with the government, where we are part of some other systems integrator where we act as OEM.
Okay. And
for example, you must have seen the drone show that happened yesterday in the Republic Day. This is all with the help of the new regulations in drone sector, which is called the Digital Sky Platform. Now, their Happiest Minds is the systems integrator, and we are the OEM underlying. So, like that with various other organizations, Goods and Service Tax Network is a name that we have put in the RHP, or Central Board of Direct Taxes in the past, where LTI, Larsen & Toubro Infotech, was the systems integrator. So that's how we are participating. And then what I said in Q3 is one of the government's leading national health agencies or authorities has become our customer as well for GIS and APIs. So you see that play out in future as well.
If you can give little color. Hello.
I request you please repeat your question.
It is reflected under which segment? Now, auto tech
under CNE. Under CNE. You'll see that reflect under CNE.
Okay. Thank you very much, and all the best, sir.
Thank
you. The next question is from the line of Siddharth Vora from L&T Mutual Fund. Please go ahead.
Yeah. So can you hear me clearly?
Yeah.
Sir, if you could explain a bit on the acquisition 10% stake you have for this. It will benefit us, and if it is a big pot, then why just start with the small 10% quota upfront?
Yeah. See, what we look for in inorganic is the ability to work with companies which have very complementary. Honestly, there are two sides. Either we will look at revenue-led acquisition, or we will look at technology-led acquisitions or strategic partnerships. So this acquisition of 10% stake in Pupil Mesh, which is it's a augmented reality, metaverse tech, auto tech, heads-up display kind of IoT company and systems company. The thinking behind this is work with companies which have a very complementary offering and have expertise there, where together we can actually build a solution which is quite novel in terms of its use case, and that is sunrise and has a sunrise potential in terms of going forward. So what the first product of this company, which they've been co-building with us actually for the last year or so, is actually a helmet. It's a helmet kit that gives you turn-by-turn guidance in the helmet, like a heads-up display, which allows the driver or rider of a two-wheeler to not have to look at a mobile phone mounted on the handlebar, because the navigation and other kinds of calling or other things comes up in the eye line without driver distraction. So they have this interesting capability around projection onto helmets. So this can go from what the product is called Navigation Visor. This will be there in the two-wheeler segment. We are also working with them on a heads-up display for the four-wheeler segment, where you can put up on the windshield itself some augmented reality-based turn-by-turn driving directions, or road safety alerts like pothole ahead or speed breaker ahead or ADAS alerts. So we feel that both for the two-wheeler and four-wheeler, this will allow our solutions to go into the hands of the OEMs as well as the end vehicle owners in a nice way by collaborating and creating a full stack solution. We are the map and software, and they are the delivery mechanism. And then there are more futuristic things around metaverse and AR, which is too early to talk about, but kind of exciting for the kind of collaboration we can do in the longer term.
Thank you, Mr. Mora. May we request that you return to the question queue for follow-up questions. Ladies and gentlemen, there is a long queue, hence we will allow one question per participant. The next question is from the line of Ravi Naredi from Naredi Investments. Please go ahead.
Sir, how this end-to-end drone solution is big opportunity in size?
I think basically, if you look at the two-wheeler market, if I remember correctly, about 16 million new vehicles sold, new two-wheelers sold every year. So a lot of accidents happen because they are, distracted as they are riding. People are looking for a better solution going forward, a connected solution, even if it's a two-wheeler. So market opportunity is honestly quite large. Of course, it's a question of how much the price of this helmet kit can be brought down. It operates with the help of Bluetooth and connects to our app, which streams the information and projects it onto the helmet's visor. Overall, if you're trying to understand the overall market size around navigation solutions and telematics, we've shared it in the RHP as well, about 44 billion by 2025 for N-case mobility tech. That's what Frost & Sullivan had kind of talked about as the addressable market.
Thank you, Mr. Naredi. May we request that you return to the question queue for follow-up questions. We'll take the next question from the line of Pratik Kumar from Antique Stock Broking. Please go ahead.
Hello. Yeah, good evening, sir. Just wanted to understand on this employee expense, there is a dip on a quarter-on-quarter basis. Is it related to difference in ESOP charge? And in general, how are you looking at employee inflation in your business?
The employee expense actually shouldn't have fallen that way. What we had done was, in the last quarter, we had made a provision for bonus for the employees for the whole year. And and the bonus amount provision was made quite a large amount. So actually, as a matter of fact, probably that would have reduced the profitability last quarter. So this quarter we have not made any further provision, or we don't intend making further provision even next quarter for bonus payment.
Thank you, Mr. Kumar. May we request that you return to the question queue for follow-up question. We'll take the next question from the line of Tushar Sarda from Athena Investments. Please go ahead.
Yeah, thank you for the opportunity and congratulations on.
Hello, we can't hear you.
Hello, can you hear me?
Yeah, now we can hear you.
Yeah, sorry. Yeah, my congratulations on excellent listing. My question is, you're talking of market size of 4 billion and 44 billion. So in 4 or 5 years, what kind of market share do you expect, or is there some absolute revenue target?
See, these are the total addressable markets as defined by Frost & Sullivan. How much penetration and adoption of our technology or uptake amongst the addressable market will happen will end up determining the actual market size over the time to come. The addressable market is basically 20 million new vehicles sold every year, can come embedded with Mapmy maps and technologies. You are seeing more and more four-wheelers come with our technology, even at the lower end, now two-wheelers coming. So, like that, different apps which are coming pre-installed or using Mapmy APIs. You are seeing popular apps like PhonePe using Mapmy India, or now the BFL Bajaj Finance app. Like that, there are so many apps. So those are the opportunities. Enterprises spending on enterprise digital transformation, whether in the private sector or public sector. So that is all the various addressable market opportunities for the company as maps and allied technologies become more and more salient. And so we are on that journey. As Mapmy India, we're on the journey to educate the market that, see 10 other companies or 5 other companies or 1 other company in your industry vertical are leveraging Mapmy India for these use cases to benefit themselves. Why don't you also do the same? Otherwise, you will have a competitive problem where the other companies will, go ahead of you. Or these are good things that people are doing in various industry sectors to create value. Why don't you also adopt it? So it's a continuous education and network effect that is being built. How much absolute revenue we can get to will be a function of how much, adoption happens of our maps and technology in the time to come. And we are doing our best to aggressively kind of educate and hoping that customers also see the value in that. And definitely more and more customers have been seeing value in that. It's apparent from the inflection point we've seen in the last few years.
Thank you, Mr. Sarda. May we request that you return to the question queue for follow-up questions. The next question is from the line of Rajat Jain from RAS Capital. Please go ahead.
Yeah, hi. So my question is, considering we're the market leaders, about 80% share in the B2B and B2B2C segments, your revenues as a percent of the total addressable market still seem pretty minuscule. So could you shed some color on that? I mean, we're talking about, the total addressable market reaching, as you said, for telematics and, automotive reaching $55 billion. So just like to understand what kind of revenues could our company see in the next, let's say, 5 to 10 years.
Let me help you first explain this addressable market versus the market size versus market penetration versus where we are today. The addressable market example you can take, there are 140 crore of people living here, and one can drop food service every day to all the 140 crores. That can be considered as an addressable market. But what would become the market size and what is the market penetration, then you can understand where everybody is. In our case also, adoption of this technology for which the addressable market exists is going to happen gradually in a certain time frame. And being the market leader, and we have become the market leader because of the fact that we entered early, we have been educating and bringing the products and solutions to the customers for some time, and we continue doing that. So we will be able to keep increasing the market penetration also as customers start adopting and understanding the value of it. So that's why we find it very difficult that when the addressable market is so large, how do I predict what will happen to us even 3 years down the road in terms of our revenue? Any prediction can be with lot of guesses, and one may go totally wrong. So at least as of now, where we are, we have shown a healthy growth in the revenue. We have shown healthy growth in the order booking. We have shown healthy growth in EBITDA, healthy growth in PAT. I mean, that's the best we can answer at this point of time. Maybe in future we might be able to give you more information as we understand better.
Thank you, Mr. Jain. We request that you return to the question queue for follow-up questions. The next question is from the line of Amit Jain from Monarch Networth Capital Limited. Please go ahead.
Thank you for the opportunity. My question relates to competitive landscape only. So let's say, it's just I'm taking a hypothetical situation, the government decides to tweak the policy. Now, how will it impact our business model?
You asked the question if the government decides to do what to the policy?
No, just decides to again change or tweak the policy and make it favorable for the foreign. I know, I'm just asking, but it can happen because government can decide at some point of time to reverse that policy.
Yeah, this is Rohan here. See, even outside of the policy, I'd like to say that our maps are much more accurate, precise, reliable, comprehensive, feature-rich, and more updated. As well as our technologies or SaaS and PaaS are world-class and offer a whole host of functionality. So that's if you look at the competitive landscape, MapMy is actually the best or the preferred supplier for customers who are looking for solutions that we offer. So even if you look at it on a one-to-one basis for B2B and B2B2C customers, MapMy is the premium or premier provider of choice. So that is answering one part. The second part I would just like to submit that globally, if you look at this sector of geospatial, it is becoming increasingly inward-looking because it's a strategic sector. It has an impact on national sovereignty, national security. Borders showing in particular way have extreme sensitivity, data sovereignty issues about where the data is held and who benefits from it. And if you look at countries like Korea, China, Russia, you find that these are secularly moving policies towards more inward. So that might give you a sense of where the government may or may not do what more or what more not they might do with the policy.
Thank you. Mr. Jain, may we request that you return to the question queue for follow-up questions. The next question is from the line of Ankush Agarwal from Surge Capital. Please go ahead.
Yeah, hi, sir. Just again on the market opportunity, right? If I look at some of your global peers, say like TomTom or Zenzen, their location intelligence revenues currently is about $500 million, right? And these guys operate across multiple geographies. So I'm just trying to understand what could be our addressable market, because what we are doing is currently licensing the maps intelligence, right, which is what these companies have done, which is where the location intelligence business is around 500 million. So if we as a company have location intelligence of just one country, which is India, so I mean the addressable market, if you are saying it's like $45 billion, that is very different, right? That is mobility solutions. Those are like geospatial analytics and all that stuff, right? But core maps intelligence, which is our business, that can't be like even $1 billion opportunity in India. That is what my understanding is, looking at your peers revenue globally. So can you help me understand what am I missing over here?
Yeah. So I'll help you first with saying that, look, Mapmy is definitely a map company, but also a technology company, and I think that's what differentiates us. So I'd like to just make that a little bit clearer. Definitely our core product is our map data or map as a service. But if you look at Mapmy's offerings, I had shown that table containing 8 different products, whether it's map and location, navigation, APIs, platforms, whether it's geospatial analytics, GIS and Geo AI, whether it's IoT, field force management, workforce automation, fleet management, whether it is N-case mobility solutions for navigation, connected vehicle telematics, ADAS, right, shared mobility and electric mobility, or it's in general location-powered enterprise digital transformation and developer APIs. If you look at any peers of ours globally, you'll find that Mapmy has actually out-innovated all of them to create a much broader stack so that there is frankly a much larger addressable market for us going into the future. Now, historically, for India, we have been an early bird in the sense that we've innovated and created these capabilities, but the Indian market was not yet advanced or mature or had the understanding the way Japanese market or European market or American market or even increasingly the Chinese market had been on the technology adoption curve. But as people know, India is many times late, but then many times even faster in terms of adopting the latest technology, especially when it enables the digital transformation. So that is one point. And the second thing I'd also like to kind of give you some more insight. Okay, our core map we have been building for India primarily. But if you look at our entire SaaS and PaaS suite, software as a service and platform as a service, APIs, etc., they are actually geography and data agnostic. We have created under our Mappls brand and Mappls platform a global solution having integrated 200 countries' other maps so that customers, either Indian or international, looking for a global solution or a non-India solution can also come to us. So, what we have been able to create is a very exciting long-term potential for our company based on 25 years of investment in creating products and technologies that are world-class. That is what will show up or play out in the years to come.
Thank you, Mr. Agarwal. May we request that you return to the question queue for follow-up questions. The next question is from the line of Rishit from Nippon. Please go ahead.
Hi. Thanks for the opportunity. And congratulations on the successful IPO. Just wanted to understand on the previous question a bit more, right? Obviously, that will require a lot of investment to cater to the additional opportunities that we're talking about outside of the core maps, right? Are we sort of talking about any investments that we'll continue to do every year? And investments on tech and obviously investments from a management bandwidth perspective. Any color you could provide there would be helpful. And just additionally on the seasonality part, right? I mean, if I look at FY21 4Q was also pretty heavy, right? If you could just delve a little bit more on, why 4Q tends to be so seasonally heavy, that would be useful. So 2 questions. Thank you.
Yeah. So on the management bandwidth and kind of how do we look at this? So in terms of technology, let me just say that a lot of our technology platforms are already built. I mean, these are all our N-case mobility suite or IoT, MGIS, WorkMate. These are all SaaS products and PaaS products and APIs that exist. So there is a lot of investments in technology that we have and keep continuously doing. And it has that leverage of building that technology for India or for international. It's more or less the same. It's a global SaaS and PaaS play. Now, but on the tech side, on the business side, definitely management bandwidth is something that we will be augmenting, and we'll be talking about that in the quarters to come. We have some strong plans on that front. because there's frankly a lot of business to be generated in the international markets. However, it will not be at the cost of going deeper into the Indian market, which is where we have full stack capabilities, a strong established presence, and the market is also growing fast on that. I think I missed the other questions, or I don't recall the other questions.
Just on the seasonality, I mean, 4Q in FY21 was also seasonally heavy. I mean, if you could just provide a little bit more color on why that is the case usually.
Seasonality, we explained seasonality in terms of basically being a B2B, B2B2C company with contracts. There is lumpiness in revenue depending on the terms of the contracts on terms of some contracts. Historically, second half of the year has been better than the first half, and then this semiconductor impact in Q3 on automotive affected. So that's kind of what might have changed Q3.
Thank you. Mr. Rashid, may we request that you return to the question queue for follow-up questions. The next question is from the line of Ankit Babel from Shubham Ventures. Please go ahead.
Sir, just one question. How you compete with Google in terms of pricing? What is the pricing difference? And secondly, for a customer, are you the only choice, or they have an option between you and Google to choose?
Yeah, see, both good questions. So if you look at MapMy's offerings, two things. One is on accuracy, reliability, precision. We are professionally generated, professionally moderated versus crowdsourced, maps. And also we have a lot more types of map content and a lot more types of APIs as well as SaaS and solutions that Google Maps does not offer. So when we go to a customer, we compete on 2 points primarily: the quality and accuracy of our map versus that of Google Map. And so if you see, we offer two-wheeler-based routing APIs, truck-based routing. Our search is down to house address level. Our maps are more real-time updated when new places come up. Just yesterday we posted about that Netaji Subhash Chandra Bose statue on the map, or when Atal Tunnel had opened up, it was immediately available on our map. So on precision, on the quality and accuracy and updatedness of the map, and the second is on the capabilities we can offer, a functionality we can offer that Google Maps cannot offer. These are the two things why customers select us. Also on price, we have the flexibility of pricing so that we can deliver significant value to the customer. So if there is no other choice, it is based on value pricing. If there is a choice where the use case for them, Google can also work, then we have the flexibility and the agility in our DNA to be able to still win the business. So, but like I said, primarily we are able to compete purely on the quality and comprehensiveness of our solutions. In many cases, Google is not even the competitor. So,
Mr. Babel, may we request that you return to the question queue for follow-up questions. Next question is from the line of Arpit Shah from Stallion Asset. Please go ahead.
Hello. Hello.
Yes, sir, you're audible.
Yeah, I just wanted to understand how does the company make money from the automotive OEMs? Like, is it one time, is subscription, or is it hybrid? How does the company make money from the automotive OEMs?
Yeah, basically with automotive OEMs, based on the vehicle models that they plan with each vehicle platform, they figure out which ones MapMy will go pre-installed in, and maps and technologies and the volume of vehicles that they plan to pre-install us on. We agree on a per vehicle fee which applies to usage for 3 to 5 years by their customer. Could be longer also. And so essentially, in a simplistic way, you can think of a per vehicle fee we get paid.
So is it one time or you have a recurring revenue at
Yeah, there are also top-ups of recurring revenue depending on the set of feature set or services that the OEM is taking from us. So if you started to see a lot of the cars are becoming connected cars, so it's not just embedded navigation, but a lot of connected vehicle services that we are providing. So so there are top-ups of per vehicle per year that have started to come in the last 1-2 years as it's the connected vehicle. Vehicles are starting to come connected only in the last 1-2 years from OEMs. So that per vehicle per year top-ups will also start showing up in future.
Thank you, Mr. Shah. May we request that you return to the question queue for follow-up questions. The next question is from the line of Tushar Pendarkar from Ventura Securities. Please go ahead.
Yeah, hello. Thanks, sir, for the opportunity. Sir, I have one question related to the tax. Our tax rate in this quarter was very low, near to 16-17%. Is there any reason behind that? Because in last 2 quarters, we paid around 25-26%.
Can you repeat the question? The line was not very clear.
Okay. Sir, our tax rate in this quarter was around 16-17% compared to 26-27% in Q1 and Q2.
Just a second. I'll give you the answer. The tax rate you have shown is lower this time. Huh? I think, it probably has to do with some other income side of our income, and that's why the difference might have come. But the numbers are accurate.
Okay. Thanks, sir. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
This is Rakesh Verma. Definitely, I would like to thank all of you. 250 of you came on call, or 320. That shows your confidence in MapMy. I would like to reassure you that we are on the right track. This has been the very first call, and MapMy is a company that believes in long-term growth of the company in every front. While one side we are trying to make sure that we maintain or keep the market leadership in India, dive more deep into the Indian market, but at the same time we have all aspirations and we are working towards it. And in the coming quarters, you will hear from us how we would like to move into the global market now that the technology and the product is ready, which is fully competent and fully geared up to meet the world market needs. An agile and young growth company like MapMy with the deep tech behind us, probably we should be making some serious inroads across the world. In the end, I would like to again request you to understand that this quarterly earnings, previous quarter, last year's quarter, is not something MapMy is used to. And while we will keep reporting the earnings the way it is required under the statutory, as part of statutory requirement on those numbers, but understand, if you want to understand MapMy better, think about year on year on a year-to-date numbers rather than previous quarter and the next quarter. These are changes of a technology company, which is a product and platform company, and which is trying to build a long-term standing in this industry. With that, I would like to thank all of you once again, and thank you so much.
Thank you. Ladies and gentlemen, on behalf of DAM Capital Advisors Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.